Another important stock that I want to draw to your attention this month, but for slightly different reasons, is Persimmon. Now, I've been a fan of this one. I think I mentioned it on Bloomberg back in about 2002 when it was trading around this kind of price level at about the 324 level. It's pretty much more than doubled since then, so you would have doubled your money in 2 years if you'd listened to me on that one. I love stock for various reasons, not least of which has been its extraordinary performance, but also because I felt 2 years ago that cries of overvaluation on the property sector were overdone and that the property sector hadn't overvalued. And that's partly because a lot of these companies are, for one reason or another, managing to extract greater values. One reason is innovation, productivity gains. The other is that they're focusing in areas of greater economic growth, which isn't necessarily in the south but in the north. But what I want to mention with Persimmon is a similar chart to what we're looking at before. Bollinger Bands, parabolic SARs. That's the central standard deviation for the Bollinger Band. The blue line there is the average, MACD there, and the stochastic. What I want to look at here is the interplay for a slightly longer term investment between a weekly and a monthly chart. This is the weekly chart for Persimmon. And what we see here quite clearly is, of course, an upward trend. No problems in that. Notice how when drawing this, I've let these price bars fall below the price. And that's because uptrends aren't scientific, contrary to what people tend to. They tend to be a little bit less scientific than we'd like. Some people say you should draw them with a thick pencil, as it were, because they do penetrate through. And you can see here the kind of thing I do, play around to see if I can find any support for a longer one. Sort of, not really, doesn't really matter. I'd probably go back to this kind of thing and say, okay, fine, we might have something here. Well, it's a weekly chart, so I'm looking at it trying to continue upwards. It's had one wave, it's had another. Some people might say this is sideways double top, and therefore it's likely to fall from the difference between 750 and 600. That's 600, that's 750, that's 150. It's likely to fall as much below this line as it has between the line and about the 550 mark. 750 and 550 is 200, so if it falls beneath the line at 600, it should go down to about 400. That's what some people would say, which is a support level here, roughly around there, which ties in with that level. Why do they say this? Well, they say, well, double top, 1 and 2, and under a double top, when the neckline, which is the line I've drawn here, this trend line, is broken down, then the distance from the peak to the line, which is from up here to about the point there, the point from here to there is taken as one measure, and that measure, by the way, 750. There you go. To, as I said before, about 550ish. That's about 200 roughly, and it's replicated to the downside when the price breaks below the neckline. So if it breaks, say, for argument's sake, I don't know, around there, say 650 for argument's sake. 650, then it'd go down to about a 200 point drop, which is about 450. Now 450 to 400, depending on where exactly it breaks this neckline, it might do it sooner or later, is how low it could go. That's the downside. That's the analysis for a double top. In actual fact, I'm not looking at it for a downside. I'm looking to see if it can continue to the upside. And the reason for that, because it's a longer term investment, because we're looking at the MACD and the weekly charts, look at that. Relatively oversold, starting to rise up. But look at how well this indicator has performed. There, when the MACD was overbought around here, the price tanked and has moved lower, lower, lower. And then it started to gently rise up as the MACD's risen. The stochastic hasn't been too bad a predictor either. It started to rise up there. So it looks like this point here is going to be something like this point here was in the past. That being the case, well, what happened there? Well, it had risen a bit, which it has done already, like it did here. It rose from here to about here, which was, arguably, you could argue that this part here was the first wave of the rise, and then it had a bit of a breather here, and this was the second major rise. And what we're seeing here is arguably the first rise, and what we're trying to capture is this second rise, as the stock price probably needs to break 750 or at least 740 to capture it. All well and good. Can it do it? Well, yes, because look at the longer term MACD. On the weekly chart, well, let me just look at the monthly chart just to make sure there's nothing really negative there. Well, there isn't really. The MACD on the monthly chart is overbought, admittedly, but it's moving in the right direction, as is the stochastic. It's not as if the MACD is falling sharply and it's losing momentum sharply. So, for instance, as it did in this period here or this period here. That all being said and done, if I look at the weekly chart again, then you can see what I'm looking for. I'm looking for this stock probably break that level before it goes in. But remember, it's a weekly chart, so I might want to enter half the position just off the back of how these things look today, and try and capture a bit of upside gain here, because it gives me ample time to get in with the rest. Maybe get in with a quarter of the position rather than half, certainly not all the position. And what kind of targets might I set? Well, it is blue sky territory. As you can see, the stock has not traded at these levels, certainly not since 1995. That being said, we've probably got ultimately just about any target we want to the upside, and we might want to do a gentle trend upwards and see what kind of levels we've achieved in the past. For instance, if that's the gradual upward trend, you can see how you could project that forward and come to some kind of conclusion that it can hit 900 pence over, say, a 6-month period. That requires a bit more printing out the charts, looking at it in detail. I don't want to do that at this precise moment. To focus on something else instead, which is how do we know when we're wrong? When should we exit? And the reason and how we know we're wrong is certainly if the price were to fall below anything like this level here, because if we're right, it shouldn't go below that level. So we've got ample protection and precision in knowing when we're wrong. Equally, and that's for entry point number 1. For entry point number 2, which is higher up here, then probably we know we're wrong when if the price fell to somewhere down here, for instance. Wrong, at least in the short term. And that's how I'd analyze things. How does this look on the daily chart? This is the daily chart for Persimmon. Well, on the daily chart, it certainly looks overbought. It looks questionable whether it'll go from here right to there in one go. It might need to go down a bit and then rise. But I'm looking at this for a longer term perspective, certainly 3 to 6 months, which is why we focused on the weekly chart. And what all of this shows you is why we're looking at and how we look at these slightly long-term perspectives on this. Well, that's all I want to say about Persimmon at the moment. Of course, with any of these analysis, I could go on for hours and hours. But equally, the point is that each month these build up and they give you extra snippets of know-how and knowledge given specific stocks on how I think they should be handled or examined professionally.